And the next presenter that we're going to hear from is Jamie Leverton. So she is the CEO of HUT8. She stepped into the CEO role in November of last year, and since then has raised the company $77.5 million, has cleaned up the balance sheet, opened up a yield account with Genesis, improving the corporate cash flows. So I'm going to pass it over to Jamie, but we're excited to hear, what she has coming next.
So, I am officially 2 months into the role as the CEO of HUT8. For those of you not familiar with HUT8, we are one of North America's largest publicly traded Bitcoin miners, as well as hodlers. So HODL means hold on for dear life, and it's a crypto-specific term for those of us that are committed to Bitcoin and the long-term potential that we see for Bitcoin. And so we hold Bitcoin on our balance sheet and have done since inception. We were first publicly listed in Q1 of 2018. So hodling is part of our long-term DNA. So just a few kind of highlights, and I'll go into more detail as I get into the deck of how HUT8 stands out in the space. We, because we've been around as long as we have a very unique strategy. We have 3 generations of equipment actively in the field, actively in the money, and we manage our equipment in a really unique way in the space, again, which I'll go to in more detail. We have a very low cost of electricity, high power output, and the highest hash rate performing in the space today. We have a large amount of Bitcoin on our balance sheet. As I said, we're hodlers at heart. At the end of September, which is the last time we released our financials, we announced that we held 2,851 Bitcoin on our balance sheet. And obviously our balance sheet appreciates as the value of Bitcoin appreciates. And certainly it's been a great run over the last few months. We've done a lot to strengthen our balance sheet. And again, I'll go into more detail of that. This is just a highlight of our capital markets profile. So we're listed on the Toronto Stock Exchange. We also trade over the counter in the US. This includes the shares outstanding updated to accommodate for the large capital raise that we were really proud to do a few weeks ago of $77.5 million. This does show debt, which we announced 2 weeks ago as part of our use of proceeds. We will pay off that debt in full by the end of February. This is me. I really hate talking about myself, but at a very high level, I've been in technology space in Canada for 21 years. The last 10 plus, I've focused on transformation and high growth mandates. And the last 2 of those mandates were specifically within the data center space. So I have a lot of history and experience with data center operations, and really Bitcoin mining is data center operations at its core. So all of our data centers, different from the mainstream data center space, do one thing and one thing only, and that is mine Bitcoin. But the actual infrastructure and how we operate those facilities is very similar to how data centers are operated in the cloud managed services and co-location space, which is where I came from. So I'm sure you are all aware of just how much we've seen an acceleration in Bitcoin adoption over the past few months. I think really Michael Saylor kind of kicked it off in August when he took such a significant position of Bitcoin on his balance sheet. And we've seen a lot of institutions follow along in that regard, which we think is only going to continue to accelerate. I think we're in the early days of that institutional adoption as the global pandemic continues to drive the printing of fiat currency by all global governments, and really the expectation that inflation is an inevitable result of all of the printing of fiat currency that's happening to fight this pandemic. And a natural hedge against that is Bitcoin. Bitcoin, by its very nature, as I'm sure you all know, is deflationary. There will be a set number of Bitcoin ever produced, with the final coin entering the market in the year 2140. This is our current asset base. All of our operations are in Canada, and what's really unique about us is the proximity. So we have 104 megawatts actively in production today, within a 2-hour drive of one another. So we have our larger site is in Medicine Hat, where we have 55 megawatts self-mining, 7 megawatts used for a strategic hosting client. And then in Drumheller, 42 megawatts with 330 petahash being used for self-mining. And the nice thing about having our entire production so close together is we're able to share site operation staff between the two sites. We do run 24/7. Bitcoin mining never stops. And we have on-site technical repair shop, which is able to repair and maintain our equipment right there on site to make sure we have the highest uptime possible for the equipment in the field. The jurisdiction of Alberta is incredibly friendly to Bitcoin mining. Obviously, they've struggled with the oil and gas patch, and Bitcoin mining is a new industry which they are very supportive of. The climate for Bitcoin mining is exceptional. It's a dry climate, very long, cold winters. Our machines are absolutely loving the winter time right now because it allows them to perform at their absolute maximum capacity. We take advantage of free cooling from the environment, and as you can see from our the photographs here, we have a container-based system which allows for maximum natural airflow to cool those servers. This just shows the Bitcoin balance that we had. This is as of the end of September versus the others in our space. We compare ourselves to other publicly traded Bitcoin miners here in North America, and really just showing that our balance is the most significant of people that also hodl in this space. And this is just highlighting how much active hash rate we had in production as of the end of September versus the peer group. And really what's so important about this is it's the active mining that's in place today that's taking advantage of the biggest benefit to the mining economics. As Bitcoin has run up in price, the margins of mining Bitcoin are incredibly favorable. And all of this active hash rate is what's participating in these economics right now, of which we have one of the largest amounts. This just shows the Bitcoin that we've mined since 2018. So consistently one of the largest producers of Bitcoin in our space. And this just highlights the Bitcoin we hold on our balance sheet versus where our market cap was compared to many of our peers as of the end of December. And really we see significant room for appreciation in our valuation as a result of us doing a much more active job of getting our story out and having it told into new markets, such as this one today. So our equipment fleet philosophy is very unique. As I say, we've been around a long time, so it allows us to have 3 generations of equipment functioning in the field at any given time. The oldest group of equipment, obviously fully depreciated, therefore very profitable. We use a very conservative depreciation schedule of 2 years. The middle kind of vintage of our equipment is almost fully depreciated. It came on site about 18 months ago. And then our newest equipment coming in, bringing the top of the line specs and output. We've been bringing on in the last 6 months. We've invested in brand new equipment from MicroBT, and we announced a couple of weeks ago another order of MicroBT equipment that will come on site over the next 6 months. So constantly refreshing the hardware in the field without taking risk on our balance sheet of having a giant capital balloon that you're chasing. We're just constantly in a refresh mode, which allows for always a portion of the fleet to be the latest generation equipment and always a portion of the fleet to be fully depreciated, and therefore it allows our balance sheet to be de-risked and very well managed. This just highlights the announcement we made a couple of weeks ago, the order that we announced in partnership with Foundry. Foundry had been able to secure brand new equipment coming from MicroBT, which is which we were able to secure for delivery over the next 6 months. And really critically important, those delivery timelines. The more hash rate you have earlier in this cycle, the better, because again, it's taking advantage of the greatest mining economics. We were really pleased to be able to announce the acquisition of that new equipment, which comes with an additional 475 petahash of compute power in that equipment order. This just gives you an aerial view of our site in Medicine Hat, which we're so proud of. So our power source is a mix of natural gas and wind. You can see some wind turbines in the background there with this aerial view. The Medicine Hat contract we entered into about 10 years ago, or it's a 10-year deal. We entered into it 2 years ago, so we still have 8 years left on this really aggressive power arrangement that we're so thrilled to have, and a partnership with the City of Medicine Hat that is really second to none. This just talks about some of the work we did on our balance sheet last year. So renegotiating key terms to drive an interest expense saving of $500,000 a year, which is now, as I told you already, we'll pay that loan off in full, as announced a couple of weeks ago. We added hosting revenue. That is a new source of revenue for us in the second half of last year. What is really compelling about having hosting revenue as a new revenue source is that's revenue that we collect in fiat. It allows us to pay some of our fiat-based operating expenses, power being our largest operating expense, and therefore we can keep more Bitcoin on the balance sheet because we have this incremental fiat source of revenue. We also insource the site operations, which drives a $1.5 million savings. They were previously outsourced to a strategic partner. And we are very proud that we were able to maintain our Bitcoin balance. And one of the ways we did that through crypto winter leading up to the halving was because we had such a strong Bitcoin position on our balance sheet that we were able to secure a loan using Bitcoin as collateral, and therefore not have to sell our Bitcoin, which has obviously proven incredibly valuable in this last bull run. And this just shows that our HUT8 stock really tracks to the movement of Bitcoin. So as a proxy to Bitcoin, it's a really nice, easy way to invest. Obviously, we trade as a traditional equity. Therefore, we can go into any traditional investment portfolio, but it does give that Bitcoin exposure. Again, in two ways for us, because we have so much Bitcoin on our balance sheet and we're creating new Bitcoin every single day. One of the other things that we announced a few weeks ago was the creation of a yield account. Genesis is a strategic partner of ours. And we announced that we had opened a yield account with Genesis, which gives us another source of fiat-based revenue. So we earn 4% on the Bitcoin we invest in this yield account. It pays us in fiat, and therefore, again, another offset to pay our fiat-based operating expenses that allows for more Bitcoin to be kept on the balance sheet. We are looking at a variety of different opportunities for growth over the next medium and long term, looking at opportunities for potential expansion of hosting partnerships, always open to looking at site expansions, potentially new sites, looking at other opportunities for potentially adding adjacent sources of alternate fiat-based revenue, as we've talked about the two new ones that we've added in the last 6 months. And really our intention is to be the blue chip gold standard for institutional investing in a Bitcoin proxy with the strongest downside protection of anybody in this space. So I have talked about the repayment of the loan, and really by releasing that the amount of Bitcoin that was being used as collateral for that loan, it allows us to put more Bitcoin to work in the yield account. So not only do we save on the interest, but we can increase the revenue that we receive from that Bitcoin through the yield account. This is our board of directors. So I started December 1st. Our AGM was December 30th. And I joined the board at that time. We also welcomed Sanjeev Samant and Chris Eldridge to the board at that time. Bill Tai continues on as our chairman for another year, which we're so thrilled about. Bill's quite a well-known venture capitalist out of California. And then we were also thrilled that Joe Flynn and Jeremy Sewell also stayed on for a new term. So really thrilled with an absolute powerhouse board of directors. And then I won't go into the appendix. This is really here, and this deck that I'm reviewing with you is available on the website. So you can feel free to go and download. And the appendix has a lot more of a kind of an educational perspective on how Bitcoin transactions work, the mining industry, how miners make money, and the things that we control, the things that we don't, and then a glossary of terms that may be new for people in this space. And then at the end, a snapshot of our Q3 financials. Full financials are available on our website, and our expectation around the announcement of our Q4 and audited year-end financials will be sometime in the mid to late March timeframe. And with that, I will open it up for questions and stop my share.
Thank you. So you've definitely been busy.
I don't sleep anymore. I just have naps.
So a few questions that came in. So firstly, can you talk a little bit about your revenue model? So when you're recognizing your revenue, do you recognize it on the gain of sale, or do you mark to market at the end of the quarter?
I believe the answer is mark to market at the end of the quarter.
And then can you talk a little bit too? So you guys are one of the largest corporate holders of Bitcoin on your balance sheet, being such a substantial holder and that being such an instrumental part of your business model. How do you guys, I guess, deal with the volatility and forecast that, like when running your business?
The volatility is very difficult to forecast. Of course, we can't forecast where Bitcoin's going to go from a pricing perspective. We do have opportunities in the field to make adjustments based on how the mining economics are going. So all of the equipment in the field can be has different modes, kind of a high performance mode, a power save mode. So we can make dynamic adjustments to the fleet. And I think as I talked about, we have added 2 incremental sources of fiat-based revenue that dampen some of that volatility risk. And I think that's important and a way that we're differentiated in the space.
Yeah, no, definitely. So on slide 13, there's such a disconnect between your market cap and Bitcoin holdings, unlike your peers. Can you maybe just talk about this a little bit more and explain what you think is happening?
Yeah, absolutely. Great question. Historically, HUT8 did not have a focus on investor relations, marketing, and we really weren't investing in getting the narrative out. So the people that knew us, knew the story, held our stock, but we weren't actively marketing and kind of getting the narrative out there to create more demand and more interest. And so we've absolutely made a focus on doing so. We didn't historically have a head of investor relations, for example. And so I joined on the 1st, and Sue joined as our head of investor relations on December 18th. This is a brand new investor deck, so the first piece of kind of marketing content that we've refreshed, but we are actively looking at broad reimagining of all of our go-to-market, and certainly making an investment in that space. Another driver of the disconnect of some of the valuations, as I'm sure you will understand, we trade on the Toronto Stock Exchange and over the counter, but companies like Riot and Marathon have the liquidity that the NASDAQ offers, which is certainly of benefit to them.
And so that actually rolls into one of our next questions, asking if you guys are working on a NASDAQ listing, or if that's something that you guys would think about.
So certainly we will think of and explore all options to increase liquidity, but any specific strategies around that I can't speak to.
Yeah. A few questions here asking about, your average all-in cost to mine a coin, and then also just talking about how you think about mining difficulty as hash rates continue to go up and a lot of miners are buying and installing new equipment?
Yeah, so that's it's such a great question, and it's why I spend so much time talking about how much hash rate we have actively in production right now, because so much of the margin opportunity in the mining space is being in the full cycle with really active participation. So we get the benefit of being so active with one of the highest installed hash rates during this kind of early phase of the market. And as the difficulty comes on, it's the margins that get compressed, but they're still very, very healthy. And what you need to make sure that there's always a strategy for and cognizance of is making sure that you have secure low-cost power, that your facility's up and running, that you're keeping the miners online as much as possible. So everything we do to be best in class operators in the space and ensure we have best in class contracts, a climate that allows for low cost cooling, all of the things I talked about is how we are able to participate regardless of the difficulty in profit in the space.
And I know you talked about your replacement cycle in the presentation, but we have a question. How often do you replace your servers?
Yeah, so that's part of our fleet management strategy. So we do, it's not a fixed schedule, but it's a regular rate of refresh. So we did a refresh the last 6 months. We've already announced one that we're in the middle of now. So it's something that's basically always happening. We're always looking at refresh, but it's not to a set timeline. And part of the reason that there is some fluidity in that time frame is because the hardware is changing. So the last cycle we had really regular step change refreshes of new equipment coming online. And we think that rate is going to slow down a bit. So we use a 2-year depreciation cycle, as I talked about. But we actually think the productive life of the equipment coming online now, the M30s, the M30Ss, we think their productive life could be 3 to 4 years. So we really look at how the machines are performing relative to what else is happening in the marketplace and make that determination on when we need to start planning a refresh cycle based on what the other chip performance is looking like versus what we have in the field.
Okay, and then a few questions regarding just how you guys are getting your power. So you talked about your 10-year agreement. Do you guys have any visibility that when that rolls off, you'll be able to, refresh and keep those same low power prices kind of going forward into perpetuity?
We feel very confident based on the strategic relationship we have with our counterparties that longevity is secure.
And then how much of your energy source comes from renewable sources?
So we're a mix of natural gas and wind. Wind is about 10%. And that varies as Alberta continues to invest in more renewables, then the mix for us will come up as well.
And then just asking, is there the potential for partnerships with Canadian oil and gas companies, given your expertise and location in Alberta?
I am open to potential strategic partnerships with all parties, including oil and gas in Alberta. Absolutely.
And then can we also just talk a little bit about Bitcoin halving?
Sure.
And how that affects your business and how you guys plan for those events?
Yeah, so the halving is fascinating. And we actually don't know if the future cycles will repeat the past cycles around halving. But the prior cycles would have kind of a negative cycle preceding the halving. Then the halving occurs, it drops the reward down by 50%. But then generally what happens next is a bull run. So it's kind of a supply and demand conversation, but the halving leads to a very dramatic decrease in supply, which in a few months, then it all catches up and the bull run starts. So the few months after, immediately post halving, are incredibly difficult from a mining economics perspective. But then the bull run starts, and that's the best period of mining economics. So it is a very delicate balance. And again, we don't know if the next cycle will be the same, because the rate of institutional adoption, the dampening of the volatility, the amount of people coming into the space with an intention to hold their Bitcoin indefinitely, we just don't know if that down cycle will return, or if we're in a different type of cycle charting new territory this time. But certainly my responsibility is to give us all of the downside risk protection for any scenario that might unfold, so that we minimize those risks as much as possible.
And then I guess just lastly, before we wrap up, so what catalysts should we be watching for in the next few months from HUT8? You've done so much already. What's coming up next?
That is a really tough question. So last week we had 4 press releases, and the week before, I think we had 2. So I can't tell you what to expect, but I can tell you we're not slowing down.
Okay, that's great. So I appreciate you taking the time to come and chat with us today. Congratulations on everything that you've been managed to accomplish in such a short period of time. If anyone has any questions that didn't get answered, again, just email Adelaide Capital or myself, and we'll talk to Jamie and her team and try to get those answered for you.
Thank you so much. Thanks again for having me. I really appreciate the time.